Hey folks, Dan Frio here, the rate update. Today is June 7th, 2021. Come back because we're going to go over a poll that I just posted. I asked, is it a good idea to pay off credit cards with a mortgage? You might be surprised in the results, so don't go away. We'll be right back. Okay, so before we get started in this, I want to go over what rates did today. But what I want to discuss in this topic today, our point of learning, is does it make sense to pay off a credit card or credit cards with a mortgage loan? And a lot of people, probably the majority of people, say no. But we did a poll on my YouTube channel one day, and it was over a few days. I said, what rate is lower, and then what this, and I asked a lot of questions basically to guide people into this topic. And it's, should you pay off such credit cards or things like that with a mortgage? And we're going to go over that after the rates. So what happened today with rates? Well, let's get on to that. People follow me every day to figure out what's going on with mortgage rates. So this is actually where we go to figure that part out. So what we follow, the biggest component when it comes to mortgage rates is what the MBS market is doing. Basically what that is, it's a bond that trades on Wall Street that is the factor, or the biggest component, I'll say, of mortgage rates. Okay, and that is this right here. You can see a zero. That means it's unchanged. So rates had done nothing today. Well, I won't really say nothing. I'm going to give you the intraday chart because it's like a stock. It doesn't say stay steady. It adjusts all day long. You guys can see it as the consumer, but if you're a mortgage advisor, you know how this works. If you're a realtor, you should know how this works. If you're a financial planner, you might not know, and that's why I do these things. So basically, let's see what's happening right now with the MBS market and get some trends and get the economic calendar for the week. So basically, the economic calendar for the week was basically consumer credit change. There really wasn't anything there, and even if there was a change, it's not really going to do anything to the market. The next few days, we will see some things that could, or most likely will, make some bumps in the road as we come through. So tomorrow we have the trade balance. That's not going to do anything. The jolt, what jolt is how many job openings there are. We always look at how many people are unemployed and so forth. But what the jolt index does is it tells us how many openings there is. And then we have the 3-year Treasury auction. Wednesday is the 10-year Treasury auction. And then on Thursday, we have the 30-year Treasury auction. So that's going to cause some maybe disruptions, I'll say, in the market. But the biggest news is coming out on Thursday. And we have a lot of inflationary things. Inflation is going to start rearing its ugly head in the mainstream media, I'll put it that way. So a lot of times it gets kind of squished back in the back burner, and people don't pay attention to it because they're looking at their 401ks, they got a job, they're looking at this, or they're worrying about where their next meal is going to come from. They don't pay attention to the inflationary measures. And no disrespect when I say you're trying to put food on the table. God bless you. You're doing what you need to do for your family. But what I'm getting at is so many times a lot of these reports that will affect us one way or another in our 401ks, in our credit card payments, in our car loans, in our mortgage rates, and our savings rates, and all that, they do play a part of what the inflationary numbers are going to look like. So Thursday is a big day for that. Okay, so that's that. So let's get on to what happened. This basically is going over what happened in the last quarter. So which is really nice because you go back all the way to the middle of April, and we're basically right where we are. Nothing's really moved since that time. I love stability, okay? Either, rates are going to go up a little bit or go down a little bit. That really doesn't concern me much. It's the speed at how it gets there. So if you look at this, we really haven't had that much volatility in this market other than right here. And again, remember, when this number goes down, this is the price of a mortgage-backed security. When the number goes down, rates go up. When this goes up, rates come down. Okay, so that's what's happening here. What I study on this part to educate you guys is all these lines. These lines that go across here, what we call Fibonacci levels. They create ceilings and floors in the trading ranges. So we're staying right in that range right now. It's a tight little range, which I like. And then these other numbers, let's get rid of this number here. We have 100, 50, and 25. The DMA means day moving average. So those also create ceilings and floors for us as well. You can see we're basically, if this line were to can move out, that line would extrapolate out to there. I kind of curved that a little bit. But you can see we're right in within these lines, especially right here through these moving averages right here. So it's a nice little tight range. Is it going to change? I'm going to go out on a limb and say when we get some news out on Thursday, we're going to have a little bumpy ride right in this market here. So I'm expecting rates to push up a little bit, nothing crazy, but you can see maybe a 0.1, a 0.2 raise in rates. Okay, so that's my expectations for this week. What happened today? Well, the day is, as I explained to everybody, rates change all day long. So this is what's going on. Again, this is the price. As the price goes up, rates come down. So we had a nice little recovery throughout the day, and we stagnated and we closed at 0. I love it. Okay, so now what I want to do is I want to talk to everybody about this. I recently posted a bunch of different polls, and I was kind of working toward an agenda here. I'll be blunt. My agenda was I wanted to explain to people how numbers really work. So I had some people that kind of went out here. I said, what number is more? And somebody said 1. You know, the number 1 is more than 4. And then they put down a thing. I figured this was a trick. And I'm like, there's no trick. Then the next thing that says, what interest rate is higher? 4, 3, 2, and 1. There's still some people that did elect 1, 2, and 3. I think they're just messing. But there was a reason for my madness. We go to here, and the post that I just recently did, I said, should you pay off your credit cards with a mortgage? And 59% of the people said no. Well, that's a good, that's a good answer, I guess, but that's not across the board saying no. Some people just say, I'm not going to use my house to pay off my credit cards. However, what I explain on that is you owe the debt. It's money that you spent. So now, how do we make you a good financial steward of your money? Because remember, a rate of 4 is higher than the rate of 1. 82% of you agree to that. Okay, so let me give you the backdrop. I created a scenario, and I had 4 different credit cards. This is actually a customer that we just recently closed on. They had 4 different credit cards, and those credit cards were $20,000, and their rate was 20%. They had another card at $18,000 balance at 20%, one at $15,000 at 18%, one at $20,000 at 15%. Okay, when you add those up, they had total credit card balances of $73,000. The average rate was $18,222 with a minimum monthly payment of $2,920. Okay, so if you just made the minimum payments, it would take you 16 years and 9 months to pay off all those credit cards. Well, it's probably going to be tough because if you have $73,000, if you have $50,000, if you have $40,000 in credit card bills, you're spending more than you make. So what do we do, or how can we help, especially if you have a home? Well, let me give you more of a backdrop. This client previously had a mortgage that was for $250,000. All right, and the backdrop of it is the rate was 4.625, and they did the loan in October of 2018. So when I back out all that numbers, remember it's a $250,000 loan at 4.625 on a 30-year term that was taken out in 2018. If I run the numbers today, that means their current balance on that mortgage is $244,000. Okay, so I'm taking $244,000 that they currently owe on their mortgage, and that mortgage payment was $1,285. Okay, so we got $1,285 a month on the mortgage, and then we also have their credit card payments of $2,920. Okay, so that means between the house payment and the credit card payments, they're spending $4,200 a month. Okay, no wonder they're using their credit cards to pay their bills, because they probably don't make that much. All right, so what I did is I took the $244,000 that they owe on the mortgage, and we added up all the credit card payments to 73, and we created a new loan. All right, That loan was $320,000. The new rate that we got them, they had some credit dings, so the rate was a little bit higher than the norm on a 15-year term, because I don't want you going backwards. I don't want you spending any more money than you have to consolidate this. And you're going to see a huge difference here. At 3.375 on a 15-year term, they'd have their mortgage payment would be $2,268. Again, their mortgage will be paid off in 15 years, along with their credit card payments, you'll actually pay these off a year early, because this would have took you 16 years. This analysis here is a 15-year term at $2,268 a month. So let's add these numbers back in. We have the $2,268 a month. Previously, they were spending $4,200 a month for a savings of $1,900 a month. So look at it. You're going to save $1,900 a month. Your house will be paid off before you even anticipated, because we took out the loan 3 years ago, and it was a 30-year fixed rate, okay? And your credit cards, I just proved to you, it's going to take you 16 years to pay off with just paying the minimum payments. So you have 27 years left on your house, 16 years on the credit cards. We lump it all together, and what's it give us? Let's go back to my numbers. $2,268 a month will have your house and all your credit cards paid off in 15 years. So basically, you just cut off 8 years of your mortgage and a year of your credit cards. So this is just one of the tools that we can offer you guys, just to make you think, because I'm trying to debunk some of these things where people are like, I would never pay off credit cards with my house payment. What rate's higher? 18 or 20 or 3? Okay. Now, if you have credit cards, you owe 10 grand and the rate's 2%, and you have that locked in for the duration of the time, God bless you, keep it. But if you have a scenario like this is when you reach out to us and say, how can you help us? Will you run some numbers for me? Does this make sense for me? Can you at least give me the facts behind all of my financials so I can make an educated decision? That's what we do here at the Frio team for you guys. We help we're basically a mortgage advisor, a financial advisor. We help for your financial peace of mind. So to find out more about me and my team, what I ask you to do is, I'm going to give you my information here in a minute, but I ask you to give me a thumbs up on the video, subscribe down below, and hit the bell so every time I post a video, you get an alert. Now, how can you reach out to us to get one-on-one consultation? Go to therateupdate.com. And if you want to just apply so we can get the ball rolling immediately, click the button right here. Click here. It'll take you to our website, and you can buy a house, refinance a house. If you do it this way by using that application right there, you're going to have basically everything in the palm of your hand. You're going to know what's going on with your mortgage application from the date you plug in the numbers to the date that you close. You get your keys or you refinance and get all those checks to pay off all those credit cards. Another way to get us, scroll down, call 844-775-LOAN. It's 844-775-5626. Or to get a one-on-one consultation with me, you can just scroll up above and you're going to get a Calendly little section here. You can pick a 15, 30, or 60-minute consultation. You click it. It'll open up the days and time that we have available. Let's say you're available on Wednesday at 10 a.m. You click it. I'll get an alert. You'll get an alert. We can do this by Skype. We can do it by Zoom, or we can do it by phone call. However you deem, whatever's the easiest way for you and how you think you're going to get the most out of our consultation. So that is it for today, guys. I hope you liked the video. I hope you like my content. Don't forget to subscribe. God bless. I'll see you tomorrow. Bye-bye.